Let's be real. California is one of the biggest, most dynamic economies on the planet. It is literally where massive opportunities meet innovative ideas every single day. But diving into the Golden State's business world without the right legal armor, that is a massive risk to everything you own. Forming a limited liability company, or an LLC, is your ultimate shield. It wraps your personal assets in a protective layer while giving you some seriously exceptional tax flexibility. So today, we're breaking down exactly how to build that shield step by step. So, are you ready to turn that entrepreneurial vision of yours into a reality? If you want to build a business that's legally sound, primed for growth, and fortified against those really common beginner pitfalls, you're going to need a structured roadmap. And that is exactly what this explainer is going to give you. Let's get you set up the right way. Okay, here's our game plan for today. 1. What is a CA-LLC? 2. Naming and registering. 3. The operating agreement. 4. Getting your EIN and local licenses. 5. California taxes and fees. And finally, number 6, ongoing compliance requirements. Starting with Phase 1, what exactly is a CLLC? We're talking the basics of limited liability companies in California. At its core, an LLC legally separates your business liabilities from your personal assets. So if the business incurs a bunch of debt, your personal bank accounts are generally totally protected. Plus, for tax purposes, it usually acts as a pass-through entity. Let's break that down simply. Instead of the business paying taxes, and then you paying taxes again on whatever profits are left over, double taxation, the business's profits just pass right through directly to your personal 1040 tax return. Now, to establish one in California, you are required to designate a registered agent. The state officially calls this an agent for service of process. Basically, this is just a person or a company with a physical address in California who is officially tasked with receiving legal and government documents on your behalf during normal business hours. And comparing an LLC to something like a sole proprietorship really highlights why this structure is so vital. Operating as a simple sole proprietor might be easy, sure, but it leaves your personal assets highly vulnerable. An LLC, on the other hand, puts up a resilient shield. Think about it. If someone trips over a rug in your Walnut Creek consulting office and decides to sue you, your personal savings account and your house remain completely out of the blast radius. Whether you're running a family-owned service company or some complex San Miguel real estate venture, the LLC structure gives you the peace of mind and the flexibility to set up management perfectly suited to your specific needs. Real quick though, before we move on, we have to talk about a major, very strict exception in California law. If your profession requires a state license to practice, think doctors, lawyers, architects, or accountants, you actually cannot form an LLC. The state completely prohibits it. Instead, you have to form what's called a professional corporation, which has its own heavy regulations under the California Business and Professions Code. So if you fall into that license category, you'll be navigating a slightly different path. All right, Phase 2, naming and registering, getting your business officially on the books. California has some pretty strict naming rules you've got to follow. Your business name must include a proper designator, like LLC or Limited Liability Company. You absolutely cannot use restricted words like bank or insurer without special authorization, and obviously it can't intentionally mislead the public. But most importantly, the name has to be completely distinguishable from existing businesses in the state records. And a quick tip here, just changing the capitalization or throwing in a comma, that doesn't make a name distinguishable. You can easily run a preliminary name search using the free online tool on the Secretary of State's website. And hey, if you find the absolute perfect name but you just aren't quite ready to file yet, you can officially reserve it for 60 days for just a $10 fee. When you're finally ready to pull the trigger, the actual registration involves 3 critical steps. First, confirm your name is available. Second, ensure your agent for service of process is lined up and ready to go. And third, you officially bring your company into existence by filing your articles of organization. That's known as Form LLC-1. You can do this right through the BizFile online portal and pay a mandatory $70 filing fee. Now listen to this massive pro tip to avoid a very common beginner mistake. Double, triple, maybe even quadruple check your spelling on Form LLC-1. Once it is submitted and accepted by the state, fixing a single typo requires filing a whole new amendment form and paying even more fees. So just take your time with it. It's also really important to remember that your LLC legally exists only after the California Secretary of State actively processes your form. Thankfully, standard online processing usually just takes about 2 to 3 business days. Once that approval comes through, congratulations, your business has officially come to life. Moving into Phase 3. The operating agreement, the internal blueprint of your LLC. Okay, here is a fascinating quirk of California law. Unlike a lot of other states where an operating agreement is merely recommended, California actually mandates that you have one. This is the document that governs exactly how capital is contributed, how profits and losses are allocated among owners, and what happens if a member wants to leave or sell their stake. It's absolutely essential for protecting member interests. But the unique part? It is entirely private. You do not file this with the state. You simply draft it, sign it, and keep it safely with your LLC's official records to preserve that liability shield. Phase 4. EIN and local licenses. Basically, securing your tax IDs and hitting local compliance. So now that the state knows you exist, how do you handle the actual money? First up is your EIN, or Employer Identification Number. Think of an EIN like a social security number, but for your business. You absolutely need this to open a commercial bank account, file your federal taxes, or hire any employees. Here is another absolutely crucial tip for you. You're going to see third-party websites out there trying to charge you $150 just to get an EIN. Do not pay them. It literally takes 5 minutes and is completely 100% free if you apply directly on the actual irs.gov website. Now, the state and federal levels aren't the only jurisdictions you need to worry about. Depending on your industry and exact location, you're going to need to obtain local compliance documents too. For instance, if you're running an online e-commerce shop out of your garage in Los Angeles, you're going to need a home occupation permit and a city business license. Selling physical products, you'll need a seller's permit to collect sales tax. Planning to hire a team? You must register for a payroll tax account number. Launching a food truck? You better believe you'll need local health permits. Your compliance is completely tailored to what your specific business actually does and exactly where it operates. Okay, Phase 5, California taxes and fees. We're talking the financial realities of running a CA-LLC. Welcome to Doing Business in California. I want you to write this number down and tape it to your manager right now. $800. Every single LLC registered or doing business in California must pay a mandatory $800 minimum franchise tax every single year. It does not matter if your business hasn't made a single dime, if it's completely dormant, or if it operated at a massive loss. You owe this fee, period. And just so you know, the temporary first-year exemption program recently expired, so brand new LLCs have to pay this $800 fee in their very first year of existence. But wait, there is more. On top of that minimum tax, California uses a scaling gross receipts fee. This kicks in once your total revenue hits $250,000. Now, notice I said gross receipts, or revenue, not net profit. Let's look at a quick, slightly painful scenario. Say you sell $300,000 worth of physical goods, but your expenses were $290,000. Your actual profit is a tiny $10,000, right? But because your gross receipts hit that $300,000 mark, that triggers an extra $900 fee to the state. For high-revenue, low-margin businesses, you really need to factor this into your annual financial planning. Finally, Phase 6, ongoing compliance requirements. Keeping your LLC in good standing. Starting the business is an awesome achievement, but keeping it legal is an ongoing job. You should honestly put these deadlines in your digital calendar right now. Within the first 90 days of forming your LLC, you must file your initial statement of information and pay a $20 fee. This form simply updates the state on who is running the company and what your current address is. Then, by the 15th day of your 4th month, your very first $800 franchise tax payment is due. If you expect to owe that gross receipts fee we just talked about, an estimated payment is due by June 15th. And you'll need to file a new statement of information every 2 years. Missing these dates can actually lead to your LLC being suspended, which effectively disables your legal shield, so stay on top of it. Also, do not forget your federal duties. This is a relatively new requirement, but the U.S. Treasury's Financial Crimes Enforcement Network, or FinCEN, now mandates that most LLCs file a beneficial ownership information report. This is a federal measure designed to safeguard the financial system from illicit activity, and it basically requires you to formally report exactly who owns and controls your new company. Now that we have charted this entire course, it's a really good time to remind you that this explainer is a general educational roadmap. Every single business operation is completely unique. Navigating California's notoriously complex regulatory and tax environment always warrants professional, legal, and financial counsel. Connecting with a qualified CPA or a business attorney can really help you structure and optimize this entire process for your specific industry. You now possess the comprehensive, step-by-step knowledge required to form a resilient shield around your personal assets, effectively manage your compliance, and harness the immense economic power of California. But the paperwork is just the very beginning. The real journey, the real growth, that all starts right now. So take this knowledge, protect yourself, and tell us, what incredible business are you going to build today?